we're in a different era right now, and keeping up with all of these new bills is important. And I commend Regis and all of you for attending these webinars, and thank Regis for the opportunity to go through what's the newest act, the American Rescue Plan Act, and talk about some important issues. So thank you, Regis. Thank you, Carlos Saladrigas, George Saladrigas, and all of Regis for what you do. And thank you all for the opportunity. We're much appreciated.
And if I may, just really quick, I want to say thank you to everyone who put this together, guys, and our clients as always. Thank you for everything and for the constant support. I am really hoping to some degree that this is our last COVID presentation. I'm hoping that there's some light at the end of the tunnel and that things are starting to get back to normal. But we thought it was important to obviously talk a little bit about this new rescue plan and make sure that you're all as informed as possible. And there's really two components to this rescue plan. There's the employer component, which has a lot to do with us as employers. And then there's some things that we want to talk about just to make you aware that really don't have to do with us as employers, but that do affect our employees. And I know Joe and Carlos will go into both of those. Also, as an FYI, we have also made the commitment as a team, along with Castro Zumpano, to go ahead and do at the very least quarterly webinars on just other topics that are relevant at the time. So our commitment to all of you is to continue to do these. I think the participation and the feedback we have gotten has been very positive, and we look forward to continuing these, but hopefully not so much related to COVID, but related to just our normal day-to-day things that are happening in the world and that affect both us as employers and our employees. So again, thank you to my awesome HR team, my incredible team here, all of my, not just HR, everyone across the board who continually, doing what they got to do to make sure that our clients are taken care of, and to Joe and Zumpano for always being there for us and being ready to help us explain what is going on in the world. So with that being said, again, thank you, Carlos and Joe, and it's all yours.
Thank you so much. So again, I'm Carlos Zumpano. Thank you all again. I'm here with my partner, Joseph Ruiz.
Hello.
And we're going to be presenting today on the American Rescue Plan Act. This is the newest COVID-19 relief bill. What we're going to talk about today we're going to do it in 4 parts. We're going to talk about a brief overview of the act. We're going to talk about, which is a big core of the presentation, part 2, specific small business related benefits, which directly have an impact on employers. And then on part 3, we're going to go through other benefits, and you'll see some miscellaneous issues there that apply to employees and on an individual basis. And then we'll conclude and circle back and do a Q&A at the end as part 4. So let's start with the latest round of aid. This is called the American Rescue Plan Act of 2021. As you know, it was recently signed as early as March 11th, 2021. It is a bill that consists of $1.9 trillion, and it's an economic stimulus plan, and the purpose of it is to speed up the recovery from the economic and health effects of the COVID-19 pandemic. We're going to go into some details today, and as we go into these details, not everything will be covered. As you know, the $1.9 trillion has other components to it. You've heard about the controversial aid to different municipalities and government entities and so forth as a result of the pandemic. All of those are going to be put aside for now. We're going to focus on the business effect of the act today. The American Rescue Plan Act. What it does is it maintains and in some instances expands current tax incentives for businesses. And we're going to go into them now. 2 main ones that it deals with and it directly addresses is the employee retention credit and also paid sick and family leave credits. These clearly have direct impacts on businesses. We're also going to go through some additional funding for SBA administered programs. You'll see that we're going to go into some specific industries that are affected by this act. It's a targeted act. I would look at this act as opposed to the PPP loans. The American Rescue Plan Act does provide some expansion of benefits that affect a lot of businesses, but it also targets specific businesses such as the restaurant business and shuttered venues, so that they're entities that have been the most hit by the pandemic. So I would say we've progressed from various PPP loan general business benefit type acts that affect the economy in general to acts that have some of those components but are much more targeted than some of the prior acts. And we'll go into those in a bit of detail. But also the act also authorizes additional federal aid to state unemployment benefits. And we'll talk about that down the road in this presentation. Also, it authorizes a second round of economic impact payments for qualifying individuals. You've heard of the $600 transition to the $2,000 transition. And that comes in the third part of the presentation when we deal with some of the individual benefits. which also include expanding on family tax credits. And what the Act also does, it also funds some distressed multi-employer and single employer pension plans in general, provides Cobra subsidies, and in the end goes through a myriad of issues. We're going to focus today on some core provisions that have an impact on your businesses, that may have very well an impact on your businesses. Of course, the Act is vast, so it's important to talk to your legal, accounting, and your tax professionals to assess your specific situation. It's very industry specific, and there may be benefits to certain industries that don't benefit other industries. So it's important to tailor the Act to your needs. So let's start in part 2 now. We're going to go through small business related benefits. And the first part that we're going to talk about is the employee retention credits. I'm going to turn it over to my partner, Joseph Rubens.
Sure. So employee retention tax credits, we've all heard about these already. This program expands it and frankly pushes it out even farther. So now it automatically expands the employee retention tax credits through the end of the year, 12/31/2021. Also, it's going to switch it over. So beginning June 30th, instead of having a credit against Social Security taxes, we're going to have a credit against Medicare taxes, the hospital insurance tax credit, the 2.9% basically you're paying in to the Medicare from FICA taxes. Also, they aim to try and help out severely distressed businesses. Now, they define that as a business that has lost 90% of its revenue quarter, from year over year for a specific quarter. So it's a big cut that an entity has to qualify for at least the severely distressed. Now, this program, it was kind of an afterthought because before it had trouble interfacing with the PPP loans and you couldn't do both. But now they've expanded it somewhat, so there may be some marginal utility there.
And I think the severely distressed businesses is important to talk about because if you're within that 90% reduction in gross receipts, you are permitted to count wages paid to all employees as qualifying wages, instead of only those wages paid to employees that are not providing services in order to determine their credit. So the severely distressed businesses, if they fall within that, have that added benefit of extended and expanded applicability.
Yeah, further, this also expands it somewhat, so some startup businesses can actually take advantage of these credits. So even employers that were non-existent in 2019 can be permitted to use the average number of 2020 employees for purposes of determining the credit wage base. Also, new businesses established after February 15, 2020 with annual receipts up to 1 million are now eligible. And again, this would be capped at $50,000 per quarter, but it does expand a program that frankly didn't get a lot of use before, now may get a little bit more use, but not wholesale.
This is now you're seeing as you see the transition from a big picture standpoint. Now you're seeing some of these acts, these rescue plans, starting to help 2020 businesses. Whereas before, as you know, you had that certain cutoff of February 15th in the past to get some benefits in the past. Now we're starting to see some expanded benefits as we're getting through the pandemic and we're trying to come up with a recovery. So now we're going to switch over to changes to the Ffcra leaves. As you know, in late December, they made the expanded leaves, the paid sick leave, and the expanded FMLA optional in 2021. So now we're going to tell you a little bit about how they expanded it under the American Rescue Plan.
Yeah, so both of these leaves, at least the tax credits for these leaves, were set to expire shortly at the end of this month. Congress has now extended that as part of the American Recovery Plan Act through September 30th, 2021. So we have another basically 6 months of potential taken leaves. Interestingly enough, you can still get the tax credit, but again, it's still optional. As of January 1st, it's been optional as opposed to mandatory prior to that. But it is the optional leave. Now, it also expands the reasons to incur leave. Now, the main reason for these expansions are very valid ones. So it expands it, so it includes people who are getting vaccinated and people who suffer side effects from getting vaccinated. So that is now an acceptable expansion, and it brings it into the fold of the original 5 to 7 items listed.
I'm going to talk about section 4 is important here. It adds a non-discrimination rule prohibiting tax credits if leave discriminates in favor of highly compensated or full-time employees or based on employment tenure. So one of the things that you may come up as a business is, okay, we're not obligated to extend the paid sick leave and the FMLA, but if we do, talk to HR, talk to Regis, one of the most important things that you can do is when you implement them as a business, implement them as closely as you can in a uniform policy to avoid disparate treatment or any type of discrimination type impact on it. So it's important to start looking for, if you choose to do things, how are you going to structure it internally as a company to at least minimize the argument that there's any kind of disparate impact.
Yeah, these discrimination provisions, they specifically point out highly compensated employees. So if your policy is, for example, officers only or officers and above can only take this, it can run afoul of these anti-discrimination provisions of this new act.
Okay.
Okay, now specifically, it also expands who can claim it. Now 501c1 entities can also claim it. It's also going to be restructured a little bit because before you can claim it as a credit against Social Security tax. Now you can also do it as part of the Medicare, the hospital insurance tax. So that can expand basically the base that you can take the credit from. Also, it basically, because they're adding on the Social Security tax as a possible well, it expands how many tax credits you can take. Now, moving on, the specific leaves, the emergency paid sick leave, that is the 10 days, the 2-week period, basically, that was originally had, these 5 reasons you can take. You have up to 10-day bucket. This actually extends a 10-day bucket, resets it starting April 1st. That's an important point there. They will have a new 10-day bucket starting April 1st. Now, the guidance hasn't come out on this yet, exactly how they're going to handle it. For example, if somebody's out let's say right before April 1st, do they still get a brand new bucket? How is that going to work? We're going to know more soon, hopefully. But again, the 10-day bucket is expanded. So prior, they only had 10 days for whatever it was, the 1-year period. Now they have a whole fresh new bucket starting April 1st.
And the expanded reasons for this leave, as Joe said earlier, they include leave resulting from COVID-19 vaccination or from injury, disability, illness arising from COVID-19 immunization. Not surprising, because as you remember, when the Ffcra first came out, we didn't have vaccines. We didn't have these issues coming up. We didn't have potential illnesses arising from immunization. Now we do. So it's not surprising that the expanded leaves include, vaccination-oriented, immunization-oriented reasons and so forth.
And it goes along with CDC guidance. They want everybody to get vaccinated. So this is one way to promote that availability is have paid time off while you go get vaccinated.
Right.
Also, it makes clear that sick leave wages are not classified, are classified as payroll costs under the SBA program, so you can't double dip.
Right, they are not, right.
Okay, now importantly, EFMLA, this is another one that has changes. This may be the most major change, frankly, other than the additional 10 days. This may be the most major change because previously under EFMLA, there's only one reason to get EFMLA, which was the 12 weeks paid. Well, before it was 10 weeks paid, but now it's 12 weeks. The reasons are expanded, not just to you have a child whose school is closed, but now any of the 7 reasons, including the 2 new ones, any of those 7 reasons are reason for expanded FMLA coverage, which means a lot more people are going to fall into the bucket of possibly having 12 weeks paid. Now, as I mentioned, they eliminated a 10-day waiting period. Originally, basically, it was 12 weeks leave. The first 2 weeks technically were unpaid under emergency FMLA. Everybody would use the paid sick leave to cover that time. But now the entire 12 weeks is paid at the prior rate, which is 2/3 of the income up to a certain threshold, depending on the employees. But that is now expanded greatly. So the number of people that could take this are anybody who's sick with COVID, anybody sick with possible vaccination complications. It's greatly expanded, basically. So before it was only one reason to possibly take it. Now it's pretty much any reason that they've given to take emergency paid sick leave can now be used to take emergency family medical leave.
Yeah, and when we go through these slides, you'll see at the top, there's a bar up there. These changes on this slide deal with emergency family medical leave, EFMLA. As you know, what they did originally with 2 different types of leaves that are called E-leave. It's E-paid sick leave, like we talked about earlier, and EFMLA. It's important as you go through each slide and look at the headings, you'll see the distinctions between the 2.
Yeah, and there is no overt reset of the time periods like there was for the E-paid sick leave. So they don't appear at this time to get a new bank of basically 12 weeks that they can take starting April 1st. Although it leaves a little bit up to interpretation there. We don't expect it to reset, but it's possible. We'll wait on basically the guidance for that final decision.
And importantly, in part of the American Rescue Plan with the American Rescue Act, they actually increased the amount of wages from $10,000 to $12,000 per employee, and that's the amount that an employer may claim to paid family credit in a given year. In the year, right?
Yeah, and that's related to the extra money for basically the additional 2 weeks.
That's right. Okay, so that we just went through now the important parts of some of the direct impacts on businesses. As you can see, the American Rescue Plan is a little bit more limited on a lot of the new developments. A lot of this stuff is still piggybacking on benefits towards businesses that have existed on prior acts, such as the e-leave and so forth, the optional e-leave. Now we're going to go into part 3, which talk a little bit more about other benefits. And it's important to go through these. Some of these will impact individuals directly or employees. The reasons that we wanted to go through them is just to give you a general overview. It's talked a lot about in media. These are important factors that affect individuals directly. May not have a direct impact, all of them, on businesses. Some may, but in the end, we wanted to take you step by step. All right.
Carlos, sorry to interrupt 1 second. Just we've had a few more people join the call since the introduction. And I think I forgot to mention it. For the Q&A session, for anybody that wants to ask a question, if you can just post your question to the chat room. What Carlos and Joe will do at the end of the presentation is go through the questions that are typed into the chat room. So sorry, just wanted to mention that, but go ahead and continue. Thank you.
No problem. So this final part 3, before we get into Q&A, it's going to break it up into the individual benefits and then certain programs that benefit businesses. We're going to get into the issues of restaurants and so forth. So these are called other benefits because they're miscellaneous and they're applying to specific industries and specific individuals. So we're going to take you through them now.
Yeah, and the American Rescue Plan Act has a laundry list of items. We're not going to cover every single thing.
Yeah.
We're trying to pick out the things that most directly affect either you all as small businesses or your employees.
Right. Okay, so the additional funding for SBA administered programs, this is important. There are now $7.25 billion more in PPP funding accessible to nonprofit entities, digital media companies, sole proprietors, independent contractors, and self-employed individuals. Eligible nonprofits now include employing 500 or more per physical location, 300 or fewer per physical location for the second round of PPP loans, in addition to other standards. Now they're likely to extend, and as you know, one thing that we haven't talked about, but that we're going to focus on, and I'm sure in the Q&A and as part of the remainder of this presentation, is how long do you have to benefit from these programs? Well, there's more guidance that's expected to come out soon. We're hoping that they come out more sooner than later. Congress is likely to extend the application deadline to apply until May 31st. So let's see what comes out soon, but we still see some more action coming and some more guidance.
Yeah, and right now the deadline is still the end of this month, so March 31st. It's likely to get extended by a separate act. It's not actually part of the American Recovery Plan Act, but I believe it's already passed the House overwhelmingly. It'll likely get taken up in the Senate, but this can give an opportunity for some people who got in the game late and got their first PPP loan during the first couple months of this year when it was initially basically the last stimulus check, the last stimulus act passed. This may give you an opportunity for the second PPP loan.
Right. In addition, the American Rescue Plan Act allocates $15 billion in economic injury disaster loans, EIDL funding, which has been added. As you know, it's another SBA administered program. Now, a third of that $15 billion is anticipated to be allotted to businesses that, one, suffered loss of revenue greater than 50%. They're located in low-income areas and employ 10 or fewer people.
Yeah, the EIDL loans, are partially forgivable. You don't have to pay them back. And they were kind of an afterthought once the PPP loan programs were fully refundable or forgivable came out, but they continue to be a valuable tool. And similar to a lot of other things that this bill does, a portion is allocated to very small businesses and minority-owned businesses and women-owned businesses. That's been a real theme of this act.
Okay, now this is an interesting development. Not surprising, the American Rescue Plan Act focuses on the hardest hit industries. One of the hardest hit industries is the restaurant businesses. The restaurants are going to get a huge benefit from this plan. And it's there's actually the formation of a restaurant revitalization fund. It's $25 billion in total. And these grants may be used to cover payroll costs, mortgage payments, rent, utilities, maintenance expenses, operational expenses, paid sick leaves, and supplies. Now, the grant amounts will not exceed the restaurant's pandemic-related revenue loss. How do you measure that? You measure it by the difference between 2020 and 2019 gross receipts, and it's up to 10 million with a limit of 5 million per physical location.
And this is handled directly by SBA, so it's not going to be in the banks like the PPP loan in the middle. So this is a direct SBA program that is a grant. So they will get this money and not have to worry about forgiveness later on.
Yeah, just make sure it's being used properly in accordance with the guidelines.
Of course.
All right. 5 billion is allocated to restaurants whose receipts in 2019 were less than 500,000. And the first 21 days of the Restaurant Revitalization Fund program prioritizes small businesses owned by women, veterans, and socially and economically disadvantaged individuals. Won't be treated as taxable income, and expenses paid with such grant amounts will be deductible. So it's a big benefit here if you're a women, veteran, or socially and economically disadvantaged individual. If from a tax standpoint, it's important to talk to your tax consultants to see how this impacts you from a tax standpoint and an accounting standpoint. Clearly a huge benefit here for restaurants.
Yeah, this is made to bring it in line with the PPP funds that eventually, although it started different, eventually Congress passed a law that said that these are, they're not treated as taxable income and you can still deduct expenses. There was questions early on whether or not you could do that. The IRS said you couldn't actually deduct the expenses that you used to pay for, but Congress eventually brought it up, and now they're treating this restaurant revitalization fund similar to that tax treatment of PPP loans, which is basically blind to it. So you can still take expenses and it doesn't count as income.
And for purposes of this restaurant revitalization fund, groups of affiliates in the restaurant industry that have more than 20 locations and public companies, among others, do not qualify. So there are some carve-outs here. And not surprisingly, I think one of the reasons why you look at the restaurants being benefited from this is that a lot of businesses that were commercial businesses during the first and the second round of PPP loan financing could take advantage of them. And they could employ and retain employees. Not so much all restaurants at that time. Some restaurants had a much more difficult time because even with qualifying for some of those programs at that time, they may not have also financially survived. And as you can see, over the last several months, there's been a lot of media coverage on restaurants going out of business. This fund specifically targets the restaurant businesses and tries to give them an opportunity during this recovery to make it through. Another industry that has been benefited by this by the American Rescue Plan Act is the shuttered venue operators grants. You've seen concert halls, things like that. They all been hit. There's another $1.5 billion to the $15 billion in shuttered venue operator grants. They added another $1.5 billion. It removes the prohibition that prohibited an entity from receiving both a PPP loan and grant after December 27th, 2020. Now the grant will now be reduced by the PPP loan amount received after December 20th, 2020. So there are some benefits, and the $1.5 billion is a lot of money for this industry. All right, we're gonna move over to unemployment benefits. Before we get into some of the individual benefits we spoke about earlier, we're getting to the final aspects of the American Rescue Act that we wanted to target that directly impact employers.
Yeah, and this is one of the programs that really benefits the employees more than the employers. This is run through the state unemployment compensation benefits. They're extending the federal supplement. It was a small bonus. There was some back and forth as to the amount here. They ended up settling on $300 a week extension and extending it through September 6, 2021. So they get several more months. This is one of the reasons that they hurried up and got this through now is because they didn't want to have any lapse. But again, this is run through the state unemployment programs. Right. So you all really won't have any insight onto this, and you won't really have to do anything as small businesses. But important for your employees or potentially laid off employees to know that that is extended and that they will have that additional supplement that the federal government provided.
That's right.
And also provided a tax exemption for a big chunk of it. So the first $10,200 in unemployment benefits for 2020 was basically made tax-free. Originally it was taxed, and now there's an exclusion for the first $10,200. And that again has some income limits, $150,000 and below, but it's a good news for former employees and people who have been laid off. Again, it doesn't affect you all directly, but your laid off workers might like to know that. Maybe this will come up.
Yeah, and from a business standpoint, you deal with the state requirements, you deal with Regis on general unemployment. It's important to know about this, be informed about this, as the individuals take a direct benefit from this if they're laid off or they qualify. Okay. Moving on to the new Cobra subsidy. There is a Cobra subsidy created by the American Rescue Plan. It's a federal subsidy covering 100% of Cobra premiums for certain employees and other qualified beneficiaries. Now, it's payable during the 6-month period of April 1st, 2021 through September 30th, 2021. So it's a big government-oriented subsidy for employers to benefit from this. Now, individuals who previously experienced an involuntary termination or reduction in hours, but who did not elect Cobra, are allowed to enroll.
Yeah, so if somebody's outside of the window now to enroll in Cobra, let's say they got laid off 6 months ago and they did not elect Cobra, there is a chance that they can actually re-elect. And there is some notice requirements. So you may have to let your employees or somewhat recently terminated employees, let them know that, hey, they have this option. Now, employee is going to have to pay for this out of pocket, but it will be credited against your Medicare taxes and other taxes. So it is a full subsidy. So you'll be credited 100% for any amounts you pay out. But again, there are some notice provisions, especially for recently released employees, that you may have to let them know about this additional subsidy. Again, it'll pay for 100% of their Cobra benefits, which is a nice gesture towards these employees.
Yeah, and good to distinguish between employer-funded versus employee payment and so forth. Okay, impact payments. These go directly to individuals. So as you know, under the Trump administration, the $600 payment was a controversial issue. A lot of legislators wanted to increase it to $2,000. It was very hotly debated between Republicans and Democrats. With the American Rescue Plan Act, the $2,000 became a reality. So the $600 recovery payment enacted in the 2020 omnibus legislation has now increased to $2,000 through an additional payment of $1,400 to qualifying individuals and $2,800 for qualifying joint filers.
Yeah, there's an adjustment here. There's phase out similar to what there was before. They've changed the amounts a little bit, but basically when your AGI reaches 75,000, it begins to get phased out, and at 80,000, which is pretty quickly, it will be phased out completely. Now, those numbers all have their respective numbers for joint filers and heads of households, but there is a phase out period, and you should be aware of it. And the phase out period is pretty quick, so it falls off a cliff very quickly.
Yeah.
Also, there are some provisions that they added that makes it a little bit easier to take. Some people were wondering if they, were borderline qualifying 1 year. What happens if, when they filed their taxes, they were technically non-qualifying? This basically eases that burden a little bit. So you can first off get a stimulus payment for everybody in your household. So if they are in your, you claim that on your tax return, you have 14 kids, you can technically get 14 kids worth of stimulus payments. Again, we're still talking about income limits, but either way, that is a possibility. And also, if there is an overpayment or advance, because let's say you didn't qualify, you qualified in 2020, but now 2021, you're not gonna have to return the money if you file your tax returns and you've already got the money and you file your tax returns, it looks like you didn't qualify. So there is that good bit of flexibility. The same works vice versa. If, for example, in 2020, technically you didn't qualify, but you file your 2021 tax returns and you would qualify, you can actually claim that as a credit on your tax returns for 2021.
Okay, good. The act also increases the child credit to $3,000 per child and $3,600 for a child under the age of 6 for the year 2021 only. That's from $2,000. It is fully refundable and partially advanceable rather than only claiming when the taxpayer files a return.
Yeah, this is a big provision. This is something that a lot of people have likened to the universal basic income. It's only passed for this 1 year as part of the pandemic relief. So it could be like a kind of a test case scenario, but it makes the credits refundable on a regular basis. So there can be equal payments. It may be monthly. It's kind of up to the treasurer right now. But starting in July, people can get these credits refunded in advance, long before they file their tax returns.
Okay,
Okay, and similarly as to the other tax credits, there are phase outs. It starts being reduced by $50 for every $1,000 of adjusted gross income over $150,000 in gross. So there are certain phase out limits. It only phases out to the level of the original $2,000. So basically the expanded amount is what phases out. Then the $2,000 doesn't get phased out until much later, $400,000 basically.
for joint filers and $200,000 for other filers.
Yeah.
And that gets phased down to zero when you get to those higher levels of income. All right, and if you receive a taxpayer receives a payment that exceeds his or her allowable child tax credit during a taxable year, the taxpayer's tax liability for the same taxable year shall be increased by the excess amount. However, for taxpayers with modified adjusted gross incomes below certain levels, that excess may be reduced by a safe harbor amount, permitting the taxpayer to retain a portion of the excess amount. So there are some benefits when you're below a certain number with your AGI.
Yeah, and again, this benefits the people who are borderline, who may be able to claim it and may not. Again, you're getting these taxes refunded basically in advance, and you may not file your tax returns until 6 months, 8 months, a year later. So it's important to have this flexibility. There is a safe harbor amount. You may have to claim it as a basically, an already refunded tax later. You may have to pay in some tax, but there are safe harbors amounts, so you don't have to get the full hit.
Okay, earned income tax credit. The American Rescue Plan Act also expands the eligibility and the amount for the EITC for taxpayers that do not have qualifying children for 2021. Now, the age has also been of the age to claim childless earned income tax credit has been reduced from 25 years to 19, except for full-time students, and also removes the upper age limit. Lastly, it also increases the earned income tax credit for the maximum credit amount to $9,820. So even though there's a lot of detail there, we just give a few of the important benefits of the earned income tax credit. Dependent care tax credit.
Sure, and again, these are all tax credits that your employees are going to claim on their personal returns. So the utility for you all small business owners, this is not something that's going to be claimed on your business tax return. But again, your employees may want to know some of this. And, these are family and child tax credit related things. So things that come up very often. Now, so this dependent care tax credit expands basically how much you can take as a deduction. It allows you to deduct about 50% of care expenses up to a certain amount. The phase out again, similarly has 125,000. It begins to phase out rather than a very low amount of 15,000 before. There also is an exclusion. If you as an employer provided dependent care assistance, they're moving up that threshold, that exclusion. Basically, you don't have to claim it as taxable income from 5,000 to 10,500. Again, these are the employees that get this exclusion, not the employers. So, the amounts are going up. It should be very beneficial for basically anybody who's got child care tax.
Yeah, and the expenses, the child and dependent care expenses that are eligible for the credit is 8,000. It increased the amount of child and dependent care expenses from 8 to 8,000 for individuals and 16,000 for 2 or more qualifying individuals. And when you look at the $125,000 of AGI, important when you go through this, individually at the individual level, to speak to the CPA and see exactly how you qualify for any of these tax credits or not. But it's good to have a little general overview of what's going on. Finally, we're going to wrap up the presentation before we get into the Q&A on some just additional items. The American Rescue Plan Act also provides additional funding to the Supplemental Nutrition Assistance Program, food stamp program, provides child care and programs for older Americans and their families, extends emergency rental assistance, homeowner assistance, and other housing programs, funds the distribution and manufacture of vaccines, adds support for agriculture, including debt relief and other assistance. And as you know, a myriad of other issues out there in this very, very lengthy act, including support for government, for governments, local governments, et cetera, and so forth. So I wanted to wrap it up with just a brief overview at the end towards some miscellaneous issues, but we've covered, I think, some major hits, how this American Rescue Plan Act impacts businesses and so forth. So with that, I'm going to turn it back to George Saladrigas and Carlos Saladrigas. I thank you all for the opportunity to do this presentation. I hope it was helpful in covering at least some important issues that you should be aware of.
Carlos, I don't have anything additional. There are some questions in the chat room. I don't know if Carlos has anything additional, but I think we're ready to jump into the Q&A. Otherwise,
Absolutely. Okay, we're transferring ourselves from the presentation into the chat room. So for the first question, for the EFMLA, does the employee have to be qualified for 1 year, employed for 1 year in order to qualify?
The answer is no, they do not.
Okay, next question. What is the revenue reduction to qualify for the round 2 of the PPP loan? I think what they were talking about earlier was the distressed businesses, gross receipts reduction, maybe.
Yeah, the revenue reduction, well, first of all, there's no real change to the PPP loan in the American Recovery Plan Act. The revenue reduction stays at the same level it was before.
Well, the way it was under the second act is that if you qualify for the second round of PPP loan, which is not part of the American Rescue Plan Act, but under the prior act, when you're dealing with the second round, you had to have 1 quarter there was a reduction of 1 quarter in revenue compared to the prior year by more than 25% was that threshold, as I believe. So that under that second round of financing, you had to at least have reduced your gross revenue by 25% in 1 quarter compared to the prior year's quarter. And you were able to use all 4 quarters of 2020 when you compared them to the prior year. So there had to be at least a 25% reduction, but it was compared to a quarter by quarter analysis. That's all set forth in that act. That's not part of the American Rescue Plan Act, although there are some peripheral issues that we're dealing with here on the PPP loan side, but that's my recollection from the prior.
Yeah, that's accurate. And there are also reduced employment levels required. I believe 300 employees maximum as opposed to the original PPP loans, which are 500 employee maximums.
Sure.
So there's various allocations. Again, American Recovery Plan Act did not change the requirements. And as we mentioned, the extension or possible extension of PPP loan deadline is actually not part of the American Recovery Plan Act. It's going to be likely to be a separate bill that's passed. Again, I think the House already passed it, waiting on the Senate to do the same. So we should be seeing that soon, but it's pretty much expected at this point.
Okay, next question is, does the Restaurant Revitalization Fund include bars that serve little or no food?
So interestingly enough, the definition is very broad for what constitutes a restaurant, and it does actually imply that basically somebody that serves very little food or even serves it kind of on the side maybe qualifies as a restaurant. So talk to your legal professional, but it actually is very, very broad as to who qualifies as a restaurant, and serving little or no food may get it done.
Yeah, and I think you'll get more confirmation. It's probably good to drill deeper in the act that, at this stage is very fresh. So there may be some guidance more that comes out and so forth, but the act that Joe says is very broad. So it's good to drill into that. And I think in the coming days, we hope to see more guidance on these issues and so forth. And it's such a big number that we would hope that the government focuses on the restaurant industry and provides some more guidance on that.
Yeah, again, waiting for regulations to come out, but right now, the way it's worded, very broad. So yes, especially somebody that serves very little food may be included.
Next question is, does the Restaurant Revitalization Fund include restaurants that are attached to hotels? I'm not aware of any prohibition.
Yeah, there's no specific exclusion. So when they say attached hotels, I'm not sure if they mean.
Yeah, I'm not.
As a hotel, there's a separate restaurant inside a hotel, but we have not seen any exclusion. Again, regulations have still not come out yet, but there doesn't seem to be any exclusion specifically for a restaurant attached to a hotel.
Yeah, an interesting side shoot from that question might be, and again, the act doesn't go into all the details, is if it's a freestanding restaurant at a hotel versus if it's a restaurant that's part of a hotel entity. Many hotels that have a restaurant have a separate entity for that restaurant. But if for some reason the restaurant is owned by the same entity that runs the hotel, which you would think from a liability standpoint that have different entities for each, that remains to be seen how they're going to address that. But I agree with Joe that the restaurants themselves, if they're freestanding, I don't think the act goes into detail on the distinction between being attached and not attached.
Yeah, that's correct. I don't see any distinction particularly for that. Frankly, I wouldn't really expect it, but it is possible.
Yeah, and I think more guidance will hopefully provide some confirmation and clarity on that. For the Cobra subsidy, what termination dates are being used in order for the termed employee to be eligible?
So not sure I understand the question fully, but the termination date really for an employee shouldn't really change. But if they were termed and they're already outside of the time period to claim Cobra, you may have to send them, if they're still within the 18 months, you may have to send them a new notice saying, hey, you have this option to re-elect now. Even though you've already fallen outside, this new act gives you some benefits and frankly, gives you in part paid Cobra to basically jump in there and make you eligible again. So basically, they're within 18 months.
And I think the next question coming up is, will Regis notify these employees that have already terminated and, had the option to apply for Cobra? And the answer is yes. The employees will be notified and given the option to go ahead and apply for Cobra if they did it at the time.
Good. Okay, we'll be sending a copy. Yep. Regis can coordinate a copy of the presentation. However, Regis decides to do that. Okay, next question is, how is the restaurant revitalization form impacted by PPP loans? Well, you know that under this act, there's a specific allocated $25 billion with a subset of $5 billion, as discussed earlier, for purposes of the American Rescue Plan. The PPP loans, the second round and the first round of financing, are still active. They're still being handled. This program here is targeted towards restaurants themselves.
Yeah, and remember, you are allowed to take both now. You may have a reduction in the total amount, but you can have the benefit of basically whichever's great. So there is, I don't understand if that's what you want to know about the impact, but you can use basically the revitalization fund still, even if you had a PPP loan.
Could the increased tax child credit of $3,000 be used when filing the 2020 tax return?
I believe it is right now the 2021 tax return. So the answer, I believe, is no.
And that should also, another question, it's a good question to consult with your tax professionals and accounting professionals, but the act increases it and the act just went into effect in March and so forth. FMLA still for 50 or more employees.
The FMLA is still for 50 or more employees. EFMLA has slightly more expanded, requirements, but the regular FMLA is still for 50 or more employees.
Exactly. Does the EIDL have a grant component, and what is the eligibility component, the requirement?
Yeah, generally the first 10,000 usually is considered a grant and doesn't need to be repaid back. Loans above that amount do have a repayment component. There are various eligibility requirements. Recommended to talk to SBA, see if you qualify. But these were very popular right in the beginning of the pandemic, before, frankly, the PPP loans and all these things. They may make a comeback. Again, they're carving out some more EIDL money, especially for very small businesses. So this could be a good item to try and go out there. And again, they're really targeting very small employers. As I mentioned, most of the new money allocated is for 10 people and under businesses. So it's a very small business is what they're targeting with the new EIDL. And yes, part of it will be, I guess, not forgivable effectively. It's basically the first part is a grant.
Does a 6-year-old child who turned 7 during 2021 qualify for the full child tax credit? Now that one is interesting. That's probably a good question for the CPA. I don't know if from the regulatory standpoint, from the IRS standpoint, when they issue these, if they're going to prorate throughout the year, whether or not he was 6 years old for the first 6 months and not the last 6 months. How that operates, we would defer to your tax professional and more guidance from the IRS directly on that issue. That's more of an individual tax issue. But so the question there really comes down to whether or not they're going to qualify prorate or get the full benefit. And with that one, we would defer you to your local tax and accounting professional.
Yeah, that sounds like something that is right for guidance. Because this is, again, a new provision. So we would expect guidance to come out on this. And frankly, this type of guidance, I wouldn't expect it to come out too quickly because, again, tax filing deadline for 2021 is going to be next March at best or next April at best. So there really doesn't seem to be a huge hurry there. The payments for the child tax credit wouldn't even start the advance payments until July. So there may not be a huge urgency to get that out ASAP as there might be for other, employee retention credits or something of that nature. But we believe that they would probably issue some guidance on this.
So as you can see there, to wrap it up, the American Rescue Plan Act does kind of a combination, unlike some of the prior acts, which were more oriented towards small businesses. This Plan Act does in fact get into quite a bit of individual benefits. So we hope you've enjoyed it. We've gone through issues that we think are pertinent towards small businesses and then also towards individual employees. And the reason we wanted to mix them up a little bit towards the end and on some of these individual issues that you should consult your tax and legal professional on an individual level is just because there's so much attention out there. And it's important for you at least to be aware of those individual benefits from a global perspective. It's not all exhaustive, but I hope the presentation was helpful in giving you a broad brush view on many of those issues.
All right. Unless there's no more questions, I'll let George kind of wrap it up. But again, thank you, Carlos and Joe, for another great presentation. We truly hope you guys found this informative. We will put this up on our website as we always do. And again, I just want to thank my team who's incredible. I want to thank Carlos and Joe, and definitely thank you, our clients, for your continued support and trust. And like I said, we will be doing these on a quarterly basis with Carlos and Joe, and we look forward to those. So George, anything else?
No, that's about it. As you mentioned, this will be available on our website. We will also send out our newsletter with a link to the recorded webinar, which will also include the Q&A chat room as well. So that's about it. Thank you everybody for joining. Really appreciate your time.
And any questions, always feel free to reach out to your HR person. And if they don't have the answer, they will definitely go out and get it for you guys. But again, thank you, everybody. Stay safe.
Thank you, Regis. Thank you all.
Thank you.
Thank you. Bye-bye.
Bye.